Hey everybody, welcome back to another episode of the Blockware Intelligence YouTube channel. It's Will here. Hope you guys are all doing well. So a nice little start to Q4 so far, with prices this week reaching as high as 56K. Let's dive into some trends that I think you guys should be aware of. So from just a purely price structure standpoint, these are some levels that I'm looking at. We've gotten above that point of breakdown for May, which we've talked about was a very crucial level in the past couple episodes, which is right around 50K, between 48, 50K. And then we've also gotten above that previous high from a couple weeks ago, and we had that failed break above the point of breakdown. And so for now, we've faced some resistance here and like 56 to 58K, which isn't surprising because we've talked about that before as this area of overhead supply. We're in that distribution zone earlier this year, from like April to May. You saw a lot of, market participants got in that little range before we had the deviation to 65K and ultimately broke down and broke the market structure. But not surprising to see us face some short-term resistance there. Also, if you look at funding over the last 24 hours, you've seen pretty aggressive moves up, and especially like on Bybit, for example. I think they're at like 60% APR to go long. So if you're looking to go long, you have to pay as shorts, and oftentimes this is price moves in the opposite direction, especially when the two are divergent. So, for example, if price is moving up and then you have funding going negative, what that's saying is, especially if you have open interest rising as well, you have shorts piling in while price is going the opposite direction. These things tend to resolve in the direction of price. So, for example, when we moved off that 30K low down here, we had this kind of effect where open interest as a percentage of market cap was rising, funding was going negative, and price was going up, and we got a huge short squeeze. And then also like right now, what we're looking at is, well here too, here's another recent example. When we had this 20% plus down day, you had funding going up really substantially, open interest as a portion of market cap rising substantially, and then we got that flush out of all those leverage longs. I don't think we're going to have that move of that magnitude here, but you are starting to see a lot of late longs that piled in over the last 24 hours, open interest rising, while price has slowly been kind of bleeding downward. So I'm looking for a retest right here of this level at that previous high around 53K. It's also like the $1 trillion market cap threshold. So, I'm not betting on this. I'm not like short or anything. But this is kind of an area that I think we'll probably see a bounce off of. Worst case would probably be that point of breakdown, retesting that right around 50K. But yeah, that's the area I'm looking at least. But yeah. This is SOPR. We talk about SOPR all the time. So basically, we're looking at the value of the output at the creation of it versus when it's realized. So you can tell on every given day the state of profit that the market is trading in. And so for this version, I used ASOPR, which is the adjusted version. So we're filtering out for all the outputs under an hour. And then I'm also running a 7-day moving average over it to kind of get the bit broader picture, filter out a bit of the noise as well, a step further. And last week, what we talked about was this blue circle right here. We had this retest of 1. And so we talked about, we want to see two things: either at least stabilization above 1, and ideally continuation to the upside. And we have started to see that continuation, which is of course a good sign. Kind of resembles here back in September of last year. We had this retest, like this 20% plus drawdown here, and we started trending upwards. So keep an eye on this. Want to see it, like, once again, continue upwards. What you don't want to see is this break 1 retested as resistance. But yeah, of course, we'll monitor it. Next up, we have our supply shock ratios. We like to look at these every week. The purple line is the exchange supply shock ratio. So looking at the available coins on exchanges relative to the coins that you aren't able to buy. And so what we see is that that's flat. So not bearish or bullish, just neutral. Our illiquid supply shock ratio is tracking the movement of the highly liquid guys and liquid guys to the illiquid guys. So we're tracking the movement of coins to entities with low spending behavior, aka the strong hands. And so that's slowly grinding upwards. We haven't seen any like real bullish impulse or anything. So that I would say is neutral to slightly bullish. And then we have our highly liquid ratio. which that one stands out here because you see this drawdown over the last 2 days. There's actually been a decline over the last week or two, slightly, but we got this down draw over the last 2 days. What that's showing is that coins are moving from liquid entities to the highly liquid entities. And I think you're starting to see that kind of get reflected in price as well. And you can see the kind of correlation between price and the ratio as well. But something to keep an eye on. Overall, I think there's not anything like showing any crazy red flags. But in the short term, I think this is once again another metric that's suggesting caution over the next couple days. But the broader picture of it is not changed. One of the cornerstone metrics in on-chain is coin days destroyed. So I wrote out this little snippet, kind of like a little educational section to kind of help you guys learn this concept. So for simplicity purposes, let's say I buy or withdraw 1 Bitcoin to my wallet. I decide to hold that. I decide to hold the coin in that wallet for 1 year. That coin has now accumulated 365 coin days. At the end of that year, I then send the Bitcoin to an exchange to sell. That means that those 365 coin days have now been destroyed. And so in bull markets, we see really high destruction as older coins are spent into strength. And then conversely, in bear markets, we see destruction decrease as long-term investors accumulate cheap coins and hold on tight for the next secular bull market. And so you can take this a step further and you can divide this by volume to just get the raw destruction. And then you can also look at, similar things like ASOL, which is average spent output lifespan, SVAB, spent volume age bands, and then also SOAB or spent output age bands. These are all kind of these lifespan related metrics. And what you see is that although we had this spike here, in general, we've been in this decline since January in terms of the age of the coins that are being spent. And here we're looking at destruction in specific. So, you're seeing that in some ways, we've talked about these supply specific dynamics that show that these long-term holders are stacking their coins and holding tight. This is just another way of looking at that. Instead of the actual accumulation behavior, we're just looking at the lack of spending behavior. So kind of the similar way to look at the same thing. But yeah, you're seeing a decline in the age of the coins, which means that these older guys are sitting tight, and the large portion of supply trading on a given day is done by younger coins. So another methodology of this is liveliness. So liveliness is the ratio of coin days created. So we talk about coin days are created. I move a coin to a wallet, the amount of time that it sits there, that it's creating coin days, accumulating coin days. And then when I destroy that, when I move the coin, then it's destroying the coin days that it accumulated while it sat in that wallet. So when you run the ratio between coin days created and coin days destroyed, you get liveliness. And so when liveliness is increasing, it means that there's more coin days being created than destroyed, aka distribution. You're seeing the older coins being sold into strength. And then conversely, when we head into weakness, you start to see liveliness decline, as you can see here, here, and here. And this just means conversely that you have more coin days being created than destroyed. So you're seeing accumulation from these older coins. You're seeing a decrease in spending of these older coins and lower destruction. So similar way of looking at that. But as you can see, we were in this decline here, which is showing that just another way to look at the accumulation we've been tracking. And the macro case continues to grow. This is my pinned tweet, actually. This is my pinned tweet, actually. This is the ratio of the long-term guys to the short-term guys. So we call this the long-term holder supply shock ratio. And what you see is we are in all-time highs, which is pretty incredible. There's several things that stand out. So first of all, we had this higher base that we've gone off of compared to 2017 in specific. And it's also taken way less time for long-term holders to completely reaccumulate back into the supply shock range. So this took, from January to mid 2019. So this is like 6 months that it took long-term holders to reaccumulate those coins, versus now. I'm sorry, this is almost a year. I misspoke. Here, this has just been several months, and we've already fully reaccumulated those coins and are now once again at all-time highs in the ratio. So the long-term guys are locking up a lot of supply. And another thing that stands out to me here is we always talk about we use a 5-month threshold for this, so 155-day threshold. When you go back 5 months ago, where were we? We were at it was May 8th, so that was 11 days. before we had that big drawdown, the initial drawdown at 30K. So the fact that you're now seeing you're still seeing long-term holder supply increase is really interesting to me, because that means that you have entities that held the whole way down through that whole mini summer bear market, and they're holding strong. So perhaps that's illustrating that some of these entities have a longer term time horizon. And then very similarly, we have the HODL waves. So this is looking at the amount of supply that hasn't moved in each denominated cohort. So we're actually at an all-time high in terms of the amount of supply that hasn't moved in at least 3 months. And we're at 85.1%. So very similarly, what you see is in bull markets, you see the shorter term cohorts. So the 1 day to 1 week, 1 week to 1 month, 1 month to 3 month cohorts take up a larger portion of supply as the longer term guys trim out into strength, and the speculators come in. And then into the bear market, the longer term guys take up a larger portion of supply and the speculators leave. And so once again, this is just showing that another way to look at supply is getting locked up, right? And so something that's slightly bearish, or another way to where I guess just be cautious would be this metric. So this is looking at all the filtered whale entities. So we take all the entities with more than 1,000 BTC, filter them out for all known entities like Purpose ETF, GBTC, QBTC, and most importantly, the exchange balances. The reasoning is like, let's say you haven't filtered out for the exchange balances, and you see what looks like whales accumulating. It could actually be coins moving to exchanges, which is actually a bearish thing, and you'd be interpreting as a bullish thing. And then conversely, you could have coins, what looks like coins moving from whale wallets out of whale wallets, when in reality it could just be coins moving from exchanges. So that's crucial in my opinion to filter that out. What you see when, and I ran a 14-day moving average over this, in general, it has a pretty tight correlation to price. But here we've actually started to see a bit of profit taking from whales. I mean, it's not anything that's like complete red alarm. We saw them take profits here. And also we talk about all the time that whales generally, they kind of initiate these secular bull markets, and then they start to sell into strength, and they accumulate into weakness, obviously. But they start to sell into strength. They don't perfectly time the tops, but they kind of sell the whole way up. So, this isn't anything all too concerning, just something to definitely keep an eye on. And then also you'll notice like the inverse correlation to exchange balances, which I just think is something interesting to just point out. You see coins moving from whales, so out of whale wallets, moving on to exchanges, coins moving to whales, coins moving off exchanges, right? And so you see this inverse correlation. And next, we're going to take a peek at some of the miner stuff. So orange, you have hash rate. Hash continues to come back on the network pretty aggressively. A reflection of that is we're looking at this blue line. This is difficulty. So every 2 weeks, difficulty adjusts. If more hash comes on the network than was 2 weeks ago, we have a positive difficulty adjustment. If it's less, we have a negative difficulty adjustment. And so the fact that we've had 6 straight positive difficulty adjustments is just another way to illustrate how aggressively hash is coming back online. Here at Blockware, we're bullish on hash as it continues to come back online after the great miner migration. And then the green line, this is the miner balance. So we see they've taken some profits after that move off of the lows here. And we covered that in the newsletter. And recently we've started to see a little bit of accumulation, nothing wild, but started to see that move back into positive territory. And that's starting to reflect into our miner net position change metric. This is looking at the 30-day change of miner balances. So you'll see this little area of green here. Once again, that's just showing that they're starting to accumulate. And on a final note about miners, this is one of my favorite kind of macro signals or macro indicators created by Charles Edwards at Capriol Investments. This is the hash ribbons. So the kind of first principles thinking behind this is that we have these minor capitulation events, and then when all that forced selling is completed, then you have miners, hash starts to come back on network, right? Only the strongest miners are left. And so when you come out of these capitulation events, one way to look at this would be how fast hash is coming back on the network. And so what Charles did was he took the 30-day moving average of hash and the 60-day moving average of hash. And we're looking at when hash, when those two lines start to cross. So when the 30-day moves above the 60-day. And so that's when we move from the white to the light red, that's when the 30-day is moving below the 60-day. when we get this dark red area, that's when the 30-day moves above the 60-day. And then when we move from red to white, that's when that happens in confluence with the 10-day simple moving average of price along with the 20-day moving average. And so as you can see, we got this buy signal about a month and a half ago. And so this is just another thing that it's not going to affect the price today or tomorrow, but this is a signal for the next couple months. So yeah, there's another way of looking at, hash coming back on the network. So short-term outlook, we're seeing some coins move from the liquid to highly liquid entities. Exchange flows are neutral. Whales are taking some profits. Funding has been spiking over the last 24 hours while market cap to OI is increasing. Wouldn't be surprised to see a short-term pullback to perhaps around 53K. And at the lowest, maybe a retest of that point of breakdown for May. But macro still highly bullish. Supply dynamics haven't changed. We've seen like long-term holder supply, for example, just continuing to be on a tear into new all-time highs. Hash coming back on the network, as we just looked at in several different ways. And retail is still out of the market. So we look at like Google search trends, Coinbase app downloads, large Twitter accounts, large YouTube accounts. It looks like in general that retail is still not in the market. Also, when we look at like the volume and the size of transactions that are making up volume, you've seen like $10 million plus transactions really take over the last month and a half. And so to me, what that's showing is that institutions are really dominating volume. But yeah, overall, I still stand on my thesis for a strong Q4. And then be sure to check out the Bitcoin related equities section written by Blake Davis. Always some great work from him. I always find stuff he writes interesting. I just don't want to speak for him, but yeah, maybe we can get him on one time. We'll get him to kind of talk through his section. But yeah, guys, I know this was a bit shorter than usual, but hope you enjoyed. Hope you got some stuff out of it. And tomorrow or I'm trying to think of when this will be released. This will probably be released Saturday. So if you're listening to this Saturday, tomorrow on Sunday, the podcast I recorded with Mike Alfred should be out, and that was a blast. Mike is really insightful guy. He's probably well connected than 99% of the people in the ecosystem. So he had some really interesting thoughts, especially about kind of the institutional side. So be sure to check that out whenever it drops. But yeah, guys, hope you enjoyed, and I hope you have a great weekend. And I'm looking forward to talking next week. Cheers.